What are some of the other reasons people reach out? I know many of them, but maybe some of them will surprise me.
Well, the standard reason for appraising usually is for bank loans. Our firm doesn't really deal with that much, but occasionally we deal with hard money lending where there's risk involved and they want to make sure, the lender want to make sure it could be private money, want to make sure that the value is correct.
Right.
Because the high probability that they may have to take the property. That's for lending we do. Second purpose is for estates. Unfortunately, when people go to the other side, they have to get appraisals for the date of death when the person died to come up with a value for tax implications, okay? So that's one of the main things that we do. We do a lot of that.
When you separate the value of the business itself from the real estate that it sits in, right? Sometimes it's better to sell the business and the property together.
Correct.
And sometimes people close the business and they sell the real estate, or they hold the real estate and lease it back to the business, right, that they sell.
Exactly.
I want to talk about the brokerage. So we have the appraisal side of what you do, but the brokerage side, you just led us right there, right, with this whole conversation about property values. So why don't we talk a little bit about Coast to Coast Realty Group as it pertains to the brokerage side of your business?
We've been involved with the brokerage end of the business for many years. Again, we offer many services, and because we could basically indicate what somebody's real estate value is of a residential home, of a commercial building, okay? A lot of people come to us and they offer us their listings because basically we can sell their properties. We work with other real estate brokers, so we co-broker a lot of properties that we do. We sell a lot of residential properties, commercial properties. We even have a hotel in Manhattan that we're trying to sell.
You're talking about a lot of sophisticated transactional things, right? But maybe just take 3 minutes and an overview of what a cap rate is.
A cap rate is what an expected return is on your investment. The greater the risk, the higher the capitalization rate. Like if you put your money in the bank, like a savings bank, it's safe, your money in the bank most of the time, okay? And you're going to get a lower return, maybe 2-3%. When you put it into real estate, you're going to have a higher risk.
So why don't we talk a little bit about some of the other reasons other than the sale or purchase of property? What are some of the other reasons people reach out? I know many of them, but maybe some of them will surprise me.
Well, the standard reason for appraising usually is for bank loans. Our firm doesn't really deal with that much, but occasionally we deal with hard money lending where there's risk involved and they want to make sure, the lender want to make sure it could be private money, want to make sure that the value is correct.
Right.
Because the high probability that they may have to take the property. That's for lending we do. Second purpose is for estates. Unfortunately, when people go to the other side, they have to get appraisals for the date of death when the person died to come up with a value for tax implications, okay? Then and there's also somebody going to inherit the property. And a lot of times we do appraisal for trust reasons. They may put a value on a property, and it could be multi-properties. Same for the estate. May that just be one property. There are many occasions where we have multi-properties that we have to appraise, especially for trust. And our company just only doesn't deal with just the $1 million properties. We may have commercial property, industrial properties, multi-families involved. They could be hundreds of millions of dollars that we deal with for appraisal values, okay? So that's one of the main things that we do, and we do a lot of that. We also do appraisals for legal battles. We have partner disputes.
Sure.
And you see a lot of that. You think people will be happy when they inherited $50 million or $100 million. No, there's partner disputes, and I see that a lot. I'm dealing with a case right now. I can't mention names. And to me, it's like hitting the lotto for many people, but not for them. And when you're dealing with legal battles, partner disputes, and family disputes, there's many ways to do the appraisals, okay?
Right.
We had, for instance, this one was for the IRS. IRS was basically pounding people for back taxes, for real estate taxes, for property taxes, income taxes, and we have to get into these appraisals on this real estate issues. Okay, so a lot of times we do partial interest appraisals. And basically, what is the definition of partial interest? It's based on court cases. And if we have a building that's worth $100,000, but you have 99%, typically you should have $99,000 worth of value, and I have 1%, 1,000. But basically, you can't do nothing without me. I can't do nothing without you. So based on that concept, okay, based on court cases, you could discount the value 10, 20, 30% based on court cases. So we do that a lot. A lot of appraisers are not aware of this. A lot of lawyers, attorneys, and accountants are not aware of this. So we basically shine in and we give them the tip of doing this. And that's why they prefer working with us on many occasions. So like I was talking about before, we do appraisals for IRS matters, for legal disputes, for lending disputes. Now we also do a lot of appraisals for government work. Okay, a lot of times government has to basically take an easement on somebody's property, a permanent easement, a temporary easement, or full taking of somebody's property. So we have to do a full appraisal of value of the person's property. If it's a permanent easement, a lot of times it's like a full taking, because if somebody has a 10,000 square foot lot and 30% of it, which would be 3,000, is a permanent easement, that's a taking. And they have to be evaluated and provided the cost of what they're giving up to the property landowner. Okay.
Is that an eminent domain?
It's kind of like an eminent domain. That's usually a full taking when we deal with something like that. But here's a partial taking. And that's why you have to define the differences on that. Okay. So basically, those easements, encroachments, that's a big issue, okay, on these type of properties, okay? Now, especially when you're dealing with marinas, okay, where they put retaining walls up, the government, okay? And so what that may happen is may interfere with the boating marina, the boats that somebody rents out the piers to, okay? And what happens at that point in time, that's an income stream. So you could have the real estate, the land may not be worth nothing because it's in a flood zone. However, they're allowed, based on the zoning, allowed to basically provide, okay, boats and rents out boats. So you could have an income of $500,000, but the land value is only going to be used for storage. You can't build on it, okay, but you're taking away the business valuation. So that's why you got to look at everything as an aspect, because sometimes you have a business in use value along with the value of the real estate, okay?
Right. So when you separate the value of the business itself from the real estate that it sits in, right? Sometimes it's better to sell the business and the property together.
Correct.
And sometimes people close the business and they sell the real estate, or they hold the real estate and lease it back to the business, right, that they sell.
Exactly.
But you brought up a great point, which I'm a water baby growing up, on Long Island near the water, the marinas. You almost don't ever at least I don't give thought at, commercial real estate with the marinas attached. And in New York, there's so much development and talk of new marinas, even in Queens, that the property takes on a completely different value if you can put a marina in place.
Also, what you just mentioned, vacant land, development sites, okay, especially here in the 5 boroughs, okay, especially in hot areas, they use appraisers to go in there and say, what is the potential of the site, okay? And we have to get a little bit into the architectural field, okay, in this situation, okay? Now, for instance...
And zoning, right?
Zoning is key, but before we even get into what we could build, we have to really look at the highest and best use, okay, which is like 4 functions. 1 is basically what the zoning permits you to build on the property, okay? 2, the most probable use. 3, what's financially feasible. And you could have 2 possibilities that you could build up on. But the fourth type is the most important, because what's financially feasible and what will bring you the greatest return. So right. One way you could build an apartment building, another construction, you could build a condominium building where you could sell out and make more money. So that's why you got to look at these features. And when you're talking about when you're going into the architectural area, okay, we're not architects, we never claim to be architects, but when you have a 10,000 square foot lot and you have an FAR of 1, you only can build 10,000 square feet. But if you have an FAR of 4, you could build 40,000 square feet. And what's interesting, okay, which is very interesting, this happened in 4th Avenue in Brooklyn, and now it's going to happen in East New York on Atlantic Avenue, okay, and Fulton Street and Pickett Avenue. But what's amazing about this, they're taking the FAR of a lot of the properties that were 1 FAR, they're making it to 7 and 8 FAR. That means you could build it 8 times the size of the lot, and you could build affordable housing there, and you could build condominiums there. And what that does is increase the land value. You increase the land value because you could build a bigger building. You could build more units, more residential units, more commercial units. You could build mixed-use buildings, so that increases the value. And it increases the value of the neighboring area as well, the neighboring blocks as well. And you'll find this all along areas where public transportation is close by. Okay, so you have to look at that. So you have to look at appraising from many perspectives. It's not just you go there and appraise a house and that's it, or appraise a commercial property and that's it. Okay, you're appraising something, what the potential of a property can be, and that's why we're looking at it.
So Joey, I have a question for you, because of course, along with, you just said it also, right? I said zoning, you said, yeah, zoning's key. When an administrative change, and we're not going to talk politics, but just policy for a minute. When administrations change, a lot of times they change zoning laws, right? To move an agenda. Yes. New York is in a unique situation currently. And so do you take into consideration policy and rent caps and, how things evolve, right? I know you probably can't take into consideration anything that's in discussion and not voted and implemented yet, but when you're looking at evaluating, especially commercial property, or like you just said, you're going to change the F rating, you're going to be able to build, 5, 7, 8 times, right, the lot size, which means you're building up.
Correct.
Right? So that changes the capacity of that lot, and it changes the income of the lot and the potential of the lot, which is great. But if the city caps rents, then you're still capped, right?
Absolutely correct. Now, what that does, okay, is government influence on overall real estate values. Anything, I think was built after 1971 or 73, that's 6 units and above, is called rent stabilized units, rent stabilization, and they have certain policies, okay? And this is where government influences affect value, okay? Now, what do I mean by that? Okay, you have a building years ago, maybe 10, 15 years ago. If you had a vacancy, you're allowed to increase that unit up 18, 20%, depending on the year and what they voted on. That's so, so you increase the rent. If you renovated the unit, okay, you're allowed to increase it again. If you renovated both interior and exterior, you're allowed to allowed to do it again. When you had a vacancy factor, you're able to increase it again, like I said before. So they took that away. They took away every advantage the landlord has. So what's happening is that many landlord owners, okay, are trying to sell their multifamily assets, and because the market values are going down. Now, 10, 15 years ago, okay, the expense to the effective gross income used to be about 32%. Today, it's almost 50%. So what does that mean?
Wow, that's significant.
Exactly. The expenses are going up. Inflation is hitting it hard, but the rents are not going up. Not as much, only 1%, 2%, depending on what year, but the expenses are going up 4 or 5% a year. So,
but your maintenance costs are also going up significantly.
Yes, exactly. As part of the expenses. So now your NOI, which is net operating income, is shrinking. So if that shrinks, okay, that means the value is going to be lower. If the capitalization rate, okay, and the mortgage interest rates are going up, that's also going to hurt the real estate values.
Joey, I'm going to pause you for a minute. You're talking about a lot of sophisticated transactional things, right? But maybe just take 3 minutes and an overview of what a cap rate is.
A cap rate is what an expected return is on your investment. The greater the risk, the higher the capitalization rate. Like if you put your money in the bank, like a savings bank, it's safe, your money in the bank most of the time, okay? And you're going to get a lower return, maybe 2-3%. When you put into real estate, you're going to have a higher risk, okay? Because you don't know what the regulations are, what's going to happen in the stock market, based on global events. If there's a war going on, you don't know if the price of oil is going up. And if you look now, when we had the lower interest rates, mortgage interest rates, people purchased homes. Today, people are not purchasing the same amount of homes. Why? Because one, the interest rates are higher at 6%, around that number today, okay, plus or negative. Okay, that's number one. Number two, they can't afford it because their income is not keeping up with the value of the real estate value. Those who have the lucky enough to get the 2% mortgage interest rates, they're not selling, because if they buy something else, they basically are going to get a higher mortgage interest rates, and they're not really happy to do that. Okay. And a lot of the younger folks out there who have jobs, they don't have a large enough down payment to buy a house. So the market is hurting right now. Now, you're talking about current events, okay? I'm sure you heard, Lisa, about the New York Stock Exchange maybe leaving New York. If that leaves New York to go to Texas or Florida or wherever it's going to go, one, it's going to hurt the retail business in Lower Manhattan. Two, it's going to hurt the residential market because there's going to be less of demand to go into that area, okay?
Well, the financial district downtown is built on that, right?
Correct.
The whole end
Correct.
of the end of the island down there.
Correct. And you know what? Since COVID, we took a hit on retail rentals, okay? Residential's been pretty stable, but what happens when we lose jobs down below Manhattan? People are going to sell. If too many people sell at once, okay, there's going to be more supply and demand, and that's going to basically decrease the real estate values for condominiums, for residential housing, all in that area. And that's also going to move along into Brooklyn and Queens, okay? So again, subject to global events, changes that could impact overall real estate values.
Right.
Okay.
So
Now,
Joey,
let me also add one more thing in there too.
yeah, of
Okay.
course.
When a landlord would renovate a building, he would renovate an apartment rental. And if he was netting 300,000 and he wanted to lower his income, he would take 100,000, gut renovated unit, and bring his net down by 100,000. He was able to write it off in 1 year. Based on IRS changing of the law and changing of regulations, now it takes, an accountant would be able to answer this better. Now it takes 27 to 29 years to write off what he just put into one investment for renovation. This is why apartments are not getting renovated as quick as it was before. And there's a lot of unrenovated apartments, number one. And that's why the government kind of created their own problem. Okay. And real estate taxes is another issue. If you look at the mayor and they want to increase the real estate taxes by 9.5%, what's going to happen to the income of people's properties? It's going to go down. It's going to eventually hurt the real estate values overall.
And it's unsustainable, right? Because again, like I said a few minutes ago, the maintenance costs and there's more and more deferred maintenance for exactly the purpose for the reason you just stated. But aside from that, there's an expectation that the city has of maintaining buildings to a certain level. It's unrealistic to ask owners to maintain a certain level of maintenance on a building when the rent can't cover, right? And you're being capped at what you can do. Why? And you don't get to deduct the maintenance, like you just said. You're going to renovate an apartment, which is great because it offsets your taxes. But at the end of the day, there's no sustainable way forward at the current suggestion. But I want to kind of move away from this, if it's okay with you, because we could talk about this for a long time.
Oh, absolutely.
And I want to talk about the brokerage. So we
Okay.
have the appraisal side of what you do, but the brokerage side, you just led us right there, right? With this whole conversation about
Correct.
property values. So why don't we talk a little bit about Coast to Coast Realty Group as it pertains to the brokerage side of your business?
We've been involved with the brokerage end of the business for many years. Again, we offer many services, and because we could basically indicate what somebody's real estate value is of a residential home, of a commercial building, okay? A lot of people come to us and they offer us their listings because basically we can sell their properties. We work with other real estate brokers, so we co-broke on a lot of properties that we do. We sell a lot of residential properties, commercial properties. We even have a hotel in Manhattan that we're trying to sell. So we also have vacant land. So the vacant land that we have, okay, we can offer potential buyers what the advantages are of selling the property because we could basically tell them what they could build on that land. So it's easy for us to price, put a value onto it, and then plus based on our contacts, okay, based on being a member of the national network, basically the ARG, okay, which we deal with attorneys and other brokers. We could also put our listings out there so everybody has them because we don't mind co-broking with other offices. And what does that mean? We chop the commission, real estate commission in half, but we don't care. It's taking care of the client as what we do mainly, and everybody's happy that deals with us because we're pretty successful in selling properties from warehouses to residential, like I said before, to commercial, small income, large income properties. So this is basically what we do.
And so for anyone listening or watching this, anybody, question where Joey's from. So it's not just that he helps buyers and sellers. He really loves New York and he loves the city and he's, born and raised and there's probably not a corner you're not familiar with, but I know that whether it's vacant land, whether it's a commercial space, whatever the parcel is, you know the highest and best use for it, and you know the right people to connect to that. So you have been very successful, and you are very blessed to have an amazing wife, and she
Don't
does
let her
a
hear
very
that.
good job. I tell her that all the time. But she's definitely part of your equation in a big way. And you're part of the community, both of you. And you always seem to know and do what's right at the end of the day for that parcel. Bring the right people together, the parcel gets what it needs, ultimately the city gets what it needs.
Absolutely.
Right? Bruce has that expression, there's no right way to do the wrong thing. You've heard him say it a few times, right?
Understandable.
He is known for that. But I feel like you do exactly the same thing when it comes to real estate. You do the right thing for each parcel, what it requires, what it needs. The valuation side and whether it's estate planning, whether it's a divorce, whether it's business valuation, right? Separating the business from a building, whatever the reason. But you also do work for people that work with HUD.
Yes, we basically do rent increases, for larger multi-family HUD buildings. I'm talking 50 units plus. We do the comparable rental studies. We come up what the fair market rents would be. And so that's basically what we do. We do the physical inspections of these properties and we try to accommodate these landlords, who own these HUD buildings. It's a very difficult task. I have associates who do the rent increases. You got to know all the HUD regulations, okay? My part of it is more the appraisals, the rental analysis of these deals, of the HUD buildings.
So I'm going to wrap us up, but if you are if you're an investor, if you're a developer, if you're somebody looking that has inherited property, you don't know what the value is, if you're somebody that is looking to purchase a business, but it sits in a building and you don't know if you want to purchase the building or lease it back,
right,
to the owner, there's an endless number of reasons to reach out to Joe. But I can assure you that Joey's going to do the right thing by that piece of property, by the parcel, by the zoning limitations, and you'll be exceptionally well informed to make the best decision you can make given whatever the circumstances. Joey, it's a pleasure. You and I can talk a long time about real estate in New York, and we have. So I really appreciate the fact that you've been able to be concise and be able to share with folks what you do and the value of you. in such a short time. So
I appreciate it, Lisa. You're a kind, very kind person with very kind words. Okay, and I appreciate everything. And if anybody needs any help, just contact us, and then you can contact Lisa, whatever you have to do, and we will help. And you will be very satisfied when we work with you. There's very few people that basically, maybe no people, are dissatisfied working with us.
well, because you do the right thing and you give, the thing about appraisal work is it's not guesstimation.
No.
It literally is a formula and
Yeah.
it needs to be followed. And, you know, property is valued differently at different times. So what a property was valued at 5 years ago, right? Or even pre-COVID versus during COVID versus today, drastically different.
And you know what? There's such a wide range in value. It makes it very tough for appraisers to deal with. And there's different reasons why people buy properties and pay different prices for it. If somebody wants to put a business in there, a restaurant business, any type of business, they're willing to pay more money for it because of the value in use. Especially you find a lot of that in Cayman Wars because the value of the building is secondary, but the profit on the business is first, and that they have to make. So it's worth it for them to put a business in a certain location, and it's more important. They're even paying higher rents because we do a lot of rental studies. We do a lot of rental studies for residential buildings, a lot of rental studies for retail space, a lot of rental studies for office spaces. And you'd be surprised what a wide difference is because everybody has different reasons why they want to be in a certain location, either
Sure.
to the traffic or to the zoning and what is permitted. And that changes values very rapidly. Sometimes we scratch our heads as appraisers and we can't figure it out what's going on.
But I really do appreciate your conversation and your knowledge. You've been doing this more than a minute. How many years are you doing this?
Easy, maybe 40 years plus a
Wow.
negative, so we were doing it for a long time. I started in the lending field and I got thrown into appraising and I went into appraising for various reasons.
Yeah.
And the same thing with the brokerage business. I've been doing it for a lot of years.
No
Since
doubt that's why
college.
you've had the success that you have. You and Maria are a great team. And yeah, I wouldn't hesitate if I were buying property, selling property in a business for whatever reason, needing to value property, I wouldn't hesitate 10 seconds to call you.
Over time, real estate's a great investment, but over time. And if you try to make a lot of money during a short time period, then you got to take greater risk. When you take
Yes.
greater risk, but if you go in there for 20, 30 years and you're paying off your mortgage, paying off the principal, and your equity is building up over the years due to inflation, you can't lose. You put your money into a bank, okay, you're not going to get the same return. And I don't know if do I have enough time to say this,
Yeah,
Lisa?
go ahead. Sure.
Okay. I look at a lot of people in Manhattan, and I had one gentleman, he was in a rent control unit, and he says, I've been here for 30 years. And I said, you hurt yourself. He goes, what do you say I hurt myself? The rent's here getting $5,000 here in Manhattan, and I'm only paying $400. I said, well, I said, if you had took the payoff from the landlord, you could have bought a property in the boroughs in Brooklyn, Queens, and you would have a lot more money today as equity buildup than you
Right.
did sitting in the rent control apartment for 30 years. And when
Yeah.
I explained to him about the numbers, he scratched his head and he realized he made an error. I'm being nice because I'm on the show. He
I,
made an error. He hurt himself. And that's why I know people who are in rent control apartments, they took the money and they bought real estate 20, 30 years ago, and they do a lot better than if they would have stayed there
sure,
and
sure.
got nothing for it.
But you sometimes I think folks think they're being smart, and they probably were for the moment for them. Everybody's circumstances are different too, you know that. What one person's able to do, another isn't, and and that person might be able to do it, but maybe in 3 years, not at the moment it's offered. There's so many different structures and stories, but that's why going to a professional and having them map out what your options are is so valuable. It doesn't cost anything to have a conversation, right?
Not at
And
all.
to have you are one of the most sophisticated real estate people for any part of real estate, right? I would come to you for anything. We have one or two others in the organization that I really feel that way about. One is two of them CPAs, and then another one who's on the lending side, really sophisticated in the way they understand deal making and deal structure. And I think that makes all the difference in the world of whether or not you're successful in real estate. It's not necessarily the building or the house or the piece of land. It's the structure of the deal.
Correct.
How do you put it together? What's the financing look like? What's the long-term plan? What's the investment involved? Like, there's so many parts. We started this conversation talking about all the different parts and pieces that just change when an administration changes. How are you going to weather administrative changes, right? And all the zoning laws that change.
Right.
You have to have the fortitude to be able to withstand all of the unknown that comes with real estate.
You got to make intelligent guesses, and
So ask the
intelligent
professional.
moves. Yeah, to do it correctly. You don't come to me. You don't come to me for medical advice. You
No.
come to me for real estate advice. Okay.
Yes.
So this is what I'm available for. So, you could contact you, and you can always contact me, and I will help them out the best of my ability.
You
Or
always
somebody in my field. Okay, they could get a head start on investments on properties.
That's great, Joey. Thanks so much for everything, and always being willing to talk to our people about real estate, helping them avoid making a really big mistake. Thank you so much.
Absolutely. Thank you. Thank you, Lisa. It's a pleasure.